Past performance is not necessarily an indication of future performance, as market conditions may vary. This is the GBPJPY chart. In my previous video recording on the 18th, I had mentioned about a trade setup which was coming up, and I intended to go short from a break of 142.45 area. If the market broke that without closing significantly above the 140.80 area with a 50 pip stop loss. The market did in fact manage to break the 142.45-ish area, and the market, the GBPJPY fell off, reaching our target of 130 pips pretty easily. So a 50 pip stop loss and a 130 pip target is what we achieved on a GBPJPY trade. Later on in the day, I had sent a trade signal to sell the Euro JPY at 124.25 area. Now, my reasoning was pretty simple. It appeared to be a Gartley formation. These were the, I'll draw my Fibonacci retracement lines. From this swing high to this swing low appeared the 78.6 fib fell exactly on 124.25. Not only that, we had a nice Gartley formation with this swing to this swing high, A to B, a retracement to C, and a potential rally to point D. So that's exactly where I thought we'd have a very strong resistance level, and that's one of the reasons why I issued a trade signal to go short from 124.25. Let's see how that particular trade played out. At about 7 o'clock, I issued the trade signal, which was sell 124, a potential sell set up on the Euro JPY at 124.25-ish. The market then rallied, came close to my entry level, and then dropped like a hot potato. Now I should have issued a cancellation of this trade, because the trade which I was expecting to go short from 124.25, it came very close to my entry order, and we got the price movement which we were expecting. I should have cancelled it, but I did not. We left the trade be, and at 10:30, which is pretty, or 10:45, which is pretty later in the day, we were filled short on our entry order. Normally, I do not like to trade after 9:30 on Fridays, or at least enter into a position after 9:30 on Fridays, because the market is winding down for the weekend, and we get some very erratic, just out of the blue kind of movements out there. I normally do not like to trade, so that's another mistake, and I should have perhaps just cancel the order and gone off with a 130 pip gain which we made on the GBPJPY. However, that's not the case. We did go short on the Euro JPY, and the market decided to rally against our entry, and we got out at a 50 pip stop loss. Now, of course, with hindsight being 2020, how would I have handled it? Number one, I would not have waited for me to enter into a position after 9:30 on a Friday morning. That's one thing which I would have changed. Another thing is that yes, I did like the market direction of going short on the Euro JPY. As you can see, if you can look at the previous few days videos, the theme has always been sell rallies in this downtrend. we are on a high level time frame downtrend, and any rally which I get on the euro yen or the pound yen, I look at perhaps shorting into those rallies. Well, what I should have done is I should have waited for the market, the Japanese market, to open on Monday morning. That's about Sunday evening for us, and should have waited for a reversal formation from uh, those from about that time, and it should have gone short at that time. So let's see what could have been potential trade setups. These are trades which I did not do, however, uh, which would have been wonderful trade setups had I been more diligent in not taking this short trade and waited for the Sunday market open uh, to tell me what I need to do next. So the market gaps up on Sunday. That's Monday, Japan time or Australia time, and the market looks like it's going to reverse from here. However, this is not yet a reversal sign for me. The market needs to try to break these highs, which it fails, and then if it goes down below the significant low, is a good indication for me to go short from. So all in all, instead of taking this short trade, what I should have done is I should have waited for a 1 to 3 top formation on the beginning of the next trading week, and once we get a short, I should have gone short from here with a 50 pip stop loss and a 100 or 150 pip target. And let's see how would that have turned out. It would chop around next to our entry for some time and then drop like a hot potato in our favor, perhaps getting our or exiting us profitably at over 130 pips. So that's a lesson for today, is that do not trade post 9:30 on Fridays, and wait for a top formation if I'm looking to sell the rallies on the beginning of the next week.